Hi, I'm Steve, and welcome to Boosting Your Financial IQ. On this channel, I help people to increase their financial intelligence so they can live better, more abundant financial lives. In this video, I'm going to show you how a balance sheet works in 5 minutes. So let's go. Welcome to the balance sheet. What we're looking at here is Home Depot's financial statement. I pulled this right off the Securities and Exchange Commission's website, the SEC's website. Since they're a publicly traded company, they're required to file their financials in their 10K annual report. So that's where I got this information from. I'm going to walk you through how to interpret the balance sheet, and this is going to be really important. So let me start with the top, and then I'm going to go line by line and walk you through each of these items. The first thing to pay attention to is that this financial statement is expressed in millions of dollars. This is really important because sometimes companies express their numbers in thousands or millions or even billions. So make sure you watch out for that. The next thing is the column header. If you notice, all these balances are as of a certain date. So unlike the income statement where the data is expressed over a period of time, like 12 months, here on the balance sheet, it's expressed as of a certain date. So really important to understand. So as of January 29th and as of January 30th. Another thing to note is that most companies report their financials on a calendar year basis from January through December. However, you can make a special election if you want a different year. That's called a fiscal year. So Home Depot has decided to file an election to make their fiscal year between February and January. And that's why you see these dates up here instead of having it shown as December 31st, as most companies do with a calendar year. All right, there are three main sections. First, we have assets of a company. Then we have liabilities. And then at the end, we have equity. I'll bold that. Okay, so the first section we're going to start with is assets. You'll notice there's two main sections under assets: current assets and non-current assets. Current, anytime you see the word current, it just means within 1 year. So theoretically, all these assets listed under current can be converted into cash within a 1-year period. Another thing to note is that each of these accounts are listed in order of liquidity, with cash being first. So cash is very simple. This is their cash, the amount of money that they have in their bank or in a money market or CD account, but it's cash. The next thing is receivables. This is the amount of money that their customers owe them, also known as accounts receivable. The reason why it says net is because it accounts for money that they may not collect from their customers. Every company has bad customers that don't pay them, so that's why you have to net it out. Next, you have inventory. This represents the value of the products that are sitting in each of these individual stores or in the warehouse. Then you have other current assets, which is a roll-up of just miscellaneous smaller assets that don't need an individual line item. Okay, then you move on to non-current assets, which includes the company's property, plant, and equipment. The reason why it says net property and equipment is because in that line item, you have accumulated depreciation. So you're writing off your assets, that balance is accumulating, you net those two things together, and bam, there you have it, net property and equipment. Operating leases, you have to show that on your balance sheet. Moving on, goodwill represents the excess price a company pays during its acquisitions. So let's say a Home Depot is buying another company, it has $1,000 of assets, but it pays $1,200. Well, that difference, that $200 or the amount that they're paying above the market value of the assets represents goodwill. Now you may wonder, why the heck would somebody pay $1,200 when their assets are only worth $1,000? It may be because the company has a good brand or the company really wants to acquire the business and there's a premium on the acquisition. So that's what goodwill represents. Then you have other assets, which are just miscellaneous assets that are represented on that line item. Moving on to the next section, we have liabilities. And you'll notice we have current liabilities and then long-term liabilities. So pretty simple, short-term debt, any debt that is due within the given year is going to be recorded in the current liability section. Accounts payable, this is the amount of money that a company owes its trade vendors. So when Home Depot goes out there and buys products from its vendors, it's not like it's paying cash on delivery. Instead, those vendors are sending Home Depot an invoice. And until that invoice is paid, it's sitting here on the books under accounts payable. Then you have things such as accrued expenses and other payables. These are just expenses that are accounted for on the balance sheet, even though they haven't been paid, or it represents liabilities that are due and payable within the given year. In the non-current liability section, you have long-term debt and lease obligations that are not due and payable within the given year. You may also have things such as deferred income tax and other liabilities. Moving on to the very last section is equity. You have common stock at par value. And since Home Depot is a publicly traded company, you can see how many of their stocks are outstanding at the given period. You also have paid in capital. This is the amount of money that has been invested into the company. Then you have retained earnings, which represents the accumulation of the company's net earnings over the years, followed by accumulated other comprehensive loss, and then treasury stock, or the amount of stock that the company has bought back from the market. Add all these things together, you end up with stockholders' equity. Take stockholders' equity plus total liabilities, and you end up with total liabilities plus stockholders' equity. That is how a balance sheet balances. So if you notice here, 76,445 equals the total asset value of 76,445. Remember, assets equal liabilities plus equity, and that's how you read a balance sheet. I hope you got a lot of value out of that video. If you did, make sure you hit that subscribe button so you get notified every time I drop a new episode just like this one. Also, there are a ton of great resources that you could find on our website at byfiq.com. If you haven't downloaded our free app, you could go to the Apple app or Google Play Store and look for Boosting Your Financial IQ. Make sure you download that app because you could get access to a ton of great content. Also, be sure to check out this next video here where I talk about how to analyze the balance sheet. Cheers.